Hello, everybody, and welcome to Accounting After Dark. And why is it after dark? Because I'm going through questions I don't own. These are owned by Wiley. So this is exercise 4.8 and KESO. So let's go ahead and take a look at this question. So they're asking us to compute net income for 2020, prepare a partial income statement beginning with income from continuing operations before income tax, and then including appropriate earnings per share information. It's also telling us to assume that 10,000 shares of common stock were outstanding during 2020. So the first thing is that I'm going to just kind of go through and do a normal income statement. And so let's go ahead because we've got cost of goods sold. I'm going to set this up as a multi-step income statement. This is going to be different than your book solution, but we're all entitled to do our things a little bit differently. So we're going to start over here. We would start off with Tucker Corporation. Okay, Tucker's a great name. I remember, one of my friend's children is named Tucker. I think of Preston Tucker, the automobile manufacturer, but then of course his grandmother said, you can't call him Tucker because it rhymes with, well, there you go. Now this is truly after dark because my humor is just gone off the charts. Okay, just the dad humor on the dark side. Okay, so I got my income statement for the year ended 12/31/20. Okay, so I'm going to start here with net sales. My net sales here were 540,000. less my cost of goods sold. My cost of goods sold is 210,000. You don't have to just put, you don't have to put less cost of goods sold. I just do that just so you know to subtract it. This gives me gross profit. So my gross profit here was 330. Then when I'm doing a multi-step income statement, and what's the difference between single step and multi-step? Multi-step is I'm showing basically a breakout of cost of goods sold because it's important for our users to know, essentially how, what is the company making off of the sales of its inventory. If I were to take a look at real quick, let's just take a look at Walmart real fast. So let's go to Walmart and we'll go to their quarterly report. We'll see how they did this quarter. I'm already dating this presentation. So yeah, their revenues went up, but what you'll see here is they have revenues, total revenues, and then they have over here cost of sales, and that's really getting over here to, they're doing it differently. If I was a merchandiser, I would probably be doing it this way. Again, there's not one correct or incorrect way to go through and to do the income statement. It just depends on the industry that you're in. But let's go through here. So we've got our gross profit. I'm going to do less selling, general, and administrative expenses. So my selling expense is 80,000. My administrative expense is 100,000. I don't have any general expenses, so my total SG&A is going to be 180,000. My net income before income taxes is going to be the 330,000 minus 180. So a couple things right here. So retained earnings, this really doesn't have anything to do with us, right? So retained earnings, this was from a prior period, or this is as of the very beginning. The depreciation expense not recorded in 2019, that is something that belongs to 2019 and does not belong to 2020. That's an error. If we were going to be showing our financial statements, we would more than likely be doing a prior period adjustment to the beginning retained earnings balance, but that's not the case here. Discontinued operations. So one of the things is that this is net income. Let's kind of go through this. So this is our net income before income taxes. And then we're going to have our income tax expense. and our income tax expense is going to be 150,000 times 20%. Why am I getting 20%? That's our effective tax rate. And then we're going to call this our net income from continuing operations. And this is what's really important about this particular exercise, is that when we have discontinued operations, meaning this was an area of business we used to be involved in, but we're no longer involved in this business, we need to segregate this from the rest of our financial statement results. So what we're going to do right here is we're going to call this net income from continuing operations. And then what we're going to be doing now, what's really important here is that this 120,000 already has taxes being deducted from it. So when we do, to get to our net income, we're going to have less loss from discontinued operations. And we would say net of $8,000 tax. So this is going to be 32,000. And again, where am I getting this number from? So if the loss here was 40,000, and what's really important is that this net income from continuing operations right over here is 120,000, right? So this already has the income taxes taken out. So what I need to be mindful of is that if I'm subtracting this value from this value here, I need to make sure that that is in fact net of tax. And let's see here. Perfect. Okay. So I want to make sure that this here is net of tax. And basically what is net of? It just means that I've taken out that $8,000 tax. What is this? So this is less 4,000 times 20%. Loss after income taxes, or basic loss, net of tax. And this is going to be 32,000. I have to take out the taxes because this net income, I can't put if I put 40,000 here, it doesn't really compare to this number because this already has the taxes taken out. So the next thing we're going to do over here is then we're going to get our net income. And our net income is going to be right here at $88,000. Okay. So a couple things here. Cash, balance sheet item. I'm not going to address it here. Dividends are not a part of the income statement. If I had dividend revenue, that's different. Dividends declared and paid, very, very different. Also too, and we're going to talk a little bit about earnings per share momentarily, but this is kind of how this is now we've kind of gone through and dealt with everything. Okay, so one of the things that I never really did in my financial accounting courses is that I never went through here and spent time on this bottom part of the financial statement, which is really talking about your net income on a basic and basically diluted. And what exactly does that mean? Well, basic earnings per share, and you're going to learn a lot more about this in 202B, but what basic earnings per share does is we're just taking over here we would be taking our 120, dividing it by the average shares outstanding. Over here of 10,000. So my basic EPS in terms of going through and doing this would be $12 per share. So when we're going through and doing this now, the other thing we have to also consider too is for disclosure purposes is that because we're segregating out this, so I would call this here our EPS from continuing operations. And then our EPS considering the discontinued operations would be over here. And let's make this a little bit clearer. So my EPS, basically from including the discontinued operations. So when you're doing the earnings per share disclosure, it's also important to highlight to the reader that, hey, our EPS was $12 per share when you do not consider the discontinued operations that we have. But when you do consider the discontinued operations we have, it definitely, it impacts us right over here. So the last thing I just wanted to show you really quickly is I'll go ahead and do a quick screen pause. So one of the things I've done here in the very back of your Google Sheet is that you'll find right over here is that this is CBIZ, which is actually an accounting firm. And the reason why I did this is that I wanted you to take a look to see, and this is obviously from a while ago, but I believe it was a pretty good illustration. If I take a look at their income statements, and right over here, okay, so cash flows, shareholders' equity. Here we go. Okay, so when you see here with, this is CBIZ, and they've got over here gross margin, and then income from continuing operations before income tax expense is roughly, 50 million. Income tax expense was 20 million. Income from continuing operations is 30 million. So here you see the loss of income basically from discontinued operations. This is net of tax. Very, very important, right? Because when you're comparing this number here that already has the income tax basically taken out, that's why we have it here. The other portion here too is like, as we're going down here and looking at the earnings per share, you'll see that basic is your continuing operations, less the discontinued operations gives you the net income. So what I would probably do to kind of amend my answer really quickly is that to kind of follow along this same pathway in terms of disclosure. And by the way, when you start working in public accounting, the Securities and Exchange Commission is really going to encourage you to openly plagiarize. And it's not that it's a bad thing to copy things. It's just that if, and this is obviously a little bit older, but if someone's gone through and has disclosed it before, and if it's gone through SEC review, that probably means that you should be doing it the same way, or at least to avoid a review comment when you're going through and submitting your financials. So we'll have over here, so we'll have our income from continuing operations, and this would be 120,000 divided by 10,000. This is our earnings per share, or 12. Basically, we'd have a loss on operations net of tax. So this is going to be 32,000 divided by 10,000 shares. Or this will be $3.20. And so then we have over here our net income, which would essentially be the 88,000 divided by 10,000 shares. Okay, so that's how we're kind of going through and coming up with this is how we would need to be showing our earnings per share. I'm not really a huge, I'm just kind of showing this to you to get acquainted with this. As you're looking through here, one of the more challenging concepts in intermediate accounting is the concept of fully diluted earnings per share, as well as even basic earnings per share. And why is that? Well, that's telling us here in the question that we have 10,000 shares common stock were outstanding during 2020. But if you think about it, if I said, well, we had 100,000 outstanding at the very beginning of the year. On March 1st, we repurchased 20,000 shares of stock. We later issued shares on October 1st. We issued 30,000 shares. You get where I'm going, and it can become an absolute nightmare. And so that's why I wouldn't do that to you on this exam, because it's not really something I'm covering. Rather, I just want you to become familiar with the concept. So I want to thank you here for joining me here today for this brief overview of exercise 4-8, and I'll see you on the next video. Have a great one.